All right, welcome back, traders. John Caruso coming to you here for the morning of July 6th with a quick pre-market video for you here this morning. Taking a look back at yesterday, we are starting to see risk-off spread rapidly throughout the commodity space. Crude oil prices down 8.5% yesterday. Gasoline prices were down, I believe, 24 cents yesterday. We've got soybeans trading along 13. Corn prices back under $6 a bushel. And the metal space is also getting hit hard as well. Copper prices are down 22% year to date. You've got silver down 18% year to date. Platinum down 12.5%. And when I take a look at gold, relatively speaking, obviously gold prices have come in pretty significantly here over the last few sessions. When you look at gold from a year to date perspective, gold's only down 3.5%. As opposed to some of the carnage that we've seen throughout the rest of the commodity space. Gold right now, immediate term oversold, sitting down here along 1760. It's got to hold this level. I do think that it will, and a bounce is likely coming here in coming sessions. How far that bounce gets is anyone's guess. I can see us stretching to maybe 1830 to 1840 on the upside in coming weeks before maybe some more selling pressure. But gold prices take a hard look at gold at present levels here. Taking a look at the yield curve. Yield curve is inverted right now. We're minus 2 basis points on the 2-year versus 10-year spread. Obviously, another harbinger for an oncoming recession. That's the third time we've seen it invert in the last year. So that certainly still does matter, despite what Chairman Powell said 2 weeks ago that the yield curve no longer mattered. Stocks right now trying to put something together. We did finish green yesterday. I think a lot of that was contributed to the slide in commodity prices. Obviously, inflation might not necessarily be the number one concern for stock investors at the moment, as we've seen energy prices, agricultural prices, everything start to come in. So the market was able to put together a little bit of a bounce yesterday. We did see some more follow through in the overnight. I believe we're sitting about 38.30 in the S&P pre-market. If you pull up a monthly chart of the VIX, okay, that's a pretty scary chart in my opinion. You've got some serious curl up action on the longer term chart, the monthly, that with my indicators is pointing to somewhere in the 50s for the VIX in coming weeks, potentially coming months. So please pay attention to that. Please exercise some risk management. Do not chase these rallies in stocks. I certainly do not believe that we are anywhere near a bottom, to be honest with you. And the risk certainly picks up, we think, as we move into the fall. We'll say between August and November. We think the risk for another stock market slide to potential crash is very high going out into the fall. So please be careful if you're chasing these rallies in stocks. That's all I have for you here today. Best of luck to you out there. We'll catch you back here tomorrow.